Okay, back to live trading with Apple, showing you how I do it. So, continuing from our video from earlier, I saw that Apple have a chance to run. I sold it a couple times, made a couple bucks. Coming in here, I saw I got my buy signal, got my indication confirmed, and now it's gonna now it's running. So I went in and I jumped on it at 29.15. I'm up $7, $8. As soon as it comes above, I set my stop loss at 29.16 right now. So no matter what happens, I ain't gonna lose money. This is what's great when you can see these slow moving markets like this. It's not going crazy. Up $7. I have a guaranteed profit of something, and I'm gonna hold it here for a minute. I'm gonna wait for it to shake out. I'm hoping it's gonna take off and keep going. If not, it comes back down and hits my 29.16. So I have a stop loss here, 29.16. So no matter if the market just turns back around, I won't lose a dime. I'm hopeful that it goes up and I can capitalize. I could sell it right now for $8. Could just sell it immediately and just take that money, or I can hide behind my stop loss there and just hope that it goes higher. All right. I only do this to make a couple bucks here and there. Guess a word of caution: you can only do this when you have $25,000 in your account or more to get you around your pattern day trading rules. This is real. This is what the old adage of it takes money to make money. It's definitely true. It takes money to lose money too, but it takes money to make money, and you can't. People who don't have enough money in their account cannot actually go in and quote unquote day trade. And this is really what this is. It's actually just scalping. So I'm going to continue to look at my indicators here real quick, and so far so good. It's moving in the right direction. Nothing scary. And nothing can happen now because I've got my stop loss set. But I want to increase that stop loss maybe to, yeah, I'll probably move it to 29. I don't know, 29.30. Ideally, 29.30 would make me a couple bucks profit. So I'll wait for a little bit more. Maybe when it hits 50. Here it is. So I'll come here to. This is what I don't like, Robinhood. I wish you had a little easier to change your stop losses out. So I'll cancel this order. And then I'll quickly go in and say stop loss order. And 129.30. Right. And I'll put my 30 shares in and I'll hit sell. And I'll get my protection back in. Yeah, good. I'm locked. Right. So when you set up a stop loss, you have to give it some room between what it is versus what you're looking to sell it at, or they'll reject your order. I couldn't put a stop loss in it at 29.45 right now, right? It's too close to that. When you look over here, you'll notice right now there's a 2 cents gap between the ask and the bid, or bid and ask, the 2 cents variance. With stocks that have a lot more variance, that will be 15, 20, 30 cents. And for this Apple, right, it's not that volatile, and you can get in and get out within this price range. Hey, there's 250, 252, or it's continuing to go up. Indicators still look good, still climbing. All right, guaranteed profit no matter what happens. Sit back and enjoy the ride. This is the fun part of trading, and when you know you can lock in your profit no matter what happens, you sit here and just enjoy the ride. And you're hopeful that it keeps moving. So that is a 129.30, I think I got it at. I might slide it up to 40. When this shows me 60, I'll slide it to 129, 129.40. Try to keep a 20-cent gap because if I don't want to keep jumping in and jumping out. If this kind of goes up and down, up and down, up and down, but it's generally trending up, I don't want to be stop lossed out and keep jumping back in, because the most dangerous part is when you jump in, then you're really hopeful. All right, now that I've jumped in, you need to slide up a little bit so I can set my stop loss so I don't lose any money. Right? I have to just get that stop loss so I don't lose. Once I get the stop loss, I don't care now. Nuclear bombs could go off. It doesn't matter. I'm going to make money. But when you first jump in, you gotta have more confidence. And once you're in, and once you got your profit loss set or your stop loss set, let it ride. That's where we're at now. That's it. But once again, I could just sell it right now. It slid back down a little bit from 29.50 to 36. It comes rolling down. I might smack that one, yeah, that my stop loss, and I walk out with what, $4, $5, right? And oh, almost. It's tapping on it, and sold it. Yep, sold it out. So that's what happens. You hit my stop loss. And you can see the exact what happened when you look at your history. I bought it here, 874, 879, within 9 minutes, right? And you're out again. Now that you're out, you've taken your profit, and you have to reassess. Do I want to jump back in? Hell no. Look at this. Look at that. Look at this drop well below the line. Now I'm seeing some red here. Oh, baby, that was a good stop. And now, and now I'm getting my indicators to get out. Too late. I'm already out. Yeah, that's what's funny. I'm out, setting up my profits, and I'll watch. Wait for the next entry. Then, like, sort of, if we were doing TQQ and SQQ, when you see the red showing up here, and you think, okay, it's done this little rise up, now it's gonna do its fall down, then you would you'd step over and start using SQQQ, which is the inverse of TQQQ, which is the inverse of this, right? Apple's part of the QQQ 100. So you wait for your next buy signal, which I don't see yet. You can be very selective. Now, I don't want to buy 100 shares of Apple at $129, mainly because I've got so much capital tied up with freaking KOLD and SQQQ, waiting for those options to expire so I can either sell more options or get the options called, and then I can have my cash back. So this is what you do when you're poor like me, don't have too much money to play with. Here, I only got 4,500 buying power. So yeah, be very careful, very selective. Wait the market out. Anyway, hope this content was helpful. Kind of shows you how I look at individual stocks if I want to day trade them per se. What I look at, how do I protect myself against a loss the best you can. I mean, typically a stop loss is when you first make the purchase of the stock, you would set your stop loss immediately. But since Apple doesn't have so much fluctuation, doesn't have radical swings, you can step in it and step out of it without too much worries. And I think just last week I got burned on Apple, where I thought my indicators was going this way, and it turned around and went the other way completely and caught me off guard, and I lost a little bit. But I think I was taking that trade after I'd already made money, so I was already playing with the house money, with casino money, so it didn't matter. So I think I lost $100, but I'd won $300 earlier. No big deal. So it's just, I guess you got to take your wins and your losses and to decide what your risk tolerances are. It's a big part of this, but it's as you can see, it can be a lot of fun. All right, I hope this content was helpful. Thanks for watching. Bye.